Good morning, guys. Uh, quick review on the PM session um, where I did this exercise of that ICT calls volatility pinball trading, where you just try to take um, every price swing or, I mean, multiple trades during a session just to practice and see how the trades play out, learn something from it. And so here it is. So I did have a couple of problems with these trades that I took yesterday, mostly around where to take profits. It is an issue of mine. I usually tend to overstay my welcome, if I can say so. Uh, I did ultimately end up with a very, very good profit of over 4,000. However, it could have easily been uh, like a like a 10,000 session for me uh, if I was directly taking profits. Anyway, this is my first trade. It was a lunch macro trade where I was using the 15-second chart for my entry. We did have a break of structure there uh, after taking a low. Then the retracement was deeper than I expected, which is typical for end of month or end of week days. From what I noticed, deeper retracements are to be expected during such times. Then I re-entered here on an order block. Once again, I'm using the 15-second chart simultaneously with the 1 minute that you're seeing on your screen. Um, and it's an order block within a volume imbalance. The price also retraced to the breaker of the previous market structure shift where I took my initial entry. And here is where the market maker buy model started to unfold. Now I have a very, very optimistic target, trying to go for the relative equal highs that are laying above around 21,180. And why I'm targeting there is because the launch macro is usually retracing against the morning trend. And it's usually the target for the launch macro, as Michael says, is a high or a low, depending on the morning trend, of course, that formed after 10 o'clock. And so between 10 and 11, we did form these relative equal highs. And this is what I'm targeting here. Okay. It was a very nice run into a pool of liquidity, however, not the relative equal highs that were laying at 10 o'clock or just after 10. It's actually this sell side imbalance, buy side inefficiency, which you can see at around 11:20 or so. It was formed, this big one that we're currently trading in. So that would have been a very good place to take profit, or at least offload the majority of the position, probably I'm thinking 80% or so, and then maybe leave a runner potentially for the relative equal highs. However, these retracements here, price will spike one more time, I think, here, but then it takes way too long. It takes way too long to take the relative equal highs, and that is an indication usually that the market is accumulating within that CB. here you see how it's hesitating. I'm gonna draw the CB. I'm gonna project it to the right any moment now, and you will see how we never actually traded to the top of the CB, which was an indication that the market is weak and it wants to go further down, which actually I was expecting it to go further down, but I guess, subconsciously just wanted it to take those relative equal highs. So this is something I have to work on more. Um, I did trail this one all the way up to a discount BC. You'll see now I'm gonna move my stop loss, and that is because I do see that it takes way too long within that CB in order to break above, and I also see those relative equal lows right around 115. There is 2 weeks down. They are exactly at the same level. Price reached the exact same level there. So I'm thinking those might be taken and then we can go up. This is the thought process. Here I marked them out. And this is the discount BC that I wanted to use as a invalidation level. So as soon as price trades below it, for me, that trade is no longer valid. And that's why I trailed my position there. So ultimately, this ended up as a 2-hour trade, which is not bad. But at a certain point, this was a 5-hour trade. So you get my point why I'm disappointed in this one. Okay. Uh, so for the third one, since we didn't fill the CB here and we displaced down, taking those relative equal lows, we did form another CB here, right around 140 or so. We now just traded into that CB, and what you're gonna see now, price consolidated a little bit, and now it displaces aggressively. This displacement here, you see that I'm pumping up the orders, the sell orders, because this CB is a breakaway gap, okay? There was a little bit of consolidation there and price displaced aggressively down. You can also see that there is buy side delivery in relative proximity to that CB. So this is not, it is a CB, but it's not really a fair value gap that you can expect the price to trade back into. Okay, this is a fair value gap that should remain open. Okay, and then I casted you see that I casted the quadrants of the current dealing range just to confirm that my PDA rates are forming at a premium level. This breakaway gap, for example, it formed right where it should form, so I'm using that. At this point here, I took half of my position and I trailed the position aggressively. I didn't expect price to retrace at all. It looked very heavy, and here I'm basically just trailing candle by candle as they form. Every time we take a new candle down, I'm trailing um, to the previous candle, like 2 candles back. I'm trading to the top of it. Okay, I expect heaviness. I expected this sell side liquidity to be targeted again. I also expected the price will reach much further down, and it did, but it was just way too late here where I live, and I had to, honestly, I had to go have dinner with my family, and I just wanted to forget about trading. I was done for the day. Okay. Anyway, if you like this kind of reviews, let me know, and maybe I can review future trades as well. And until I speak to you soon, I'm out of here.